Silicon Valley is being broken up here, being acquired, at least pieces of it, by First Citizens. So they're going to take over all of the deposits. They're also going to get the loan book. So, roughly $72 billion in Silicon Valley loans at a $16.5 billion discount.
And it's a good deal if you can get it. I mean, it's a bailout. I mean, the government or FDIC component is underwriting First Citizens deal. I mean, you're not getting that deal unless they take the losses. I mean, it's just anybody who doesn't call this a bailout is just like way smarter than me. I mean, and I hope they really feel smart about it, because their feelings don't matter to me either. It's just we're going to have a good open here, and the problem is, a green open, a good open being for a bear, because that's when we sell. Don't forget, we cover when things are red, which is exactly what we're doing, which seems like forever ago. But on the open of game 57, which was Friday, covering shorts, I put the red eye, Hedgeye, green eye, red eye app. I put it on snooze after I covered a bunch of stuff, and then you get the bounce. And now you're going to have the FOMO, and the FOMO is going to have different components, right? I mean, you're not going to have the Titanic doesn't tilt the other way when you're chasing the bank stocks and the energy stocks again. So those are the things that got swallowed. The REITs, they're down the most last week. Even utilities were down hard. So it gets so much more complicated after these. The same pattern, right? You get the cycle, credit event, market panic, government bailout, bounce, and you do it again, and then again. It's like Starwood Capital last week after Barry underperformed, I should say, on TV. I mean, like, those things are going straight down. Private equity stocks. I mean, there's so many different components to this that it's admittedly very difficult for the macro tourist or the macro tourists to keep up with it all. So today we're going to get open shots at that. You saw the low end of my risk range on First Republic has a $1 in front of it, right?
Yeah. And I think, well, I shouldn't speculate, but it based on, it's kind of like, now that the market has seen the deal that First Citizens got, I think that actually might make it more of a challenge for First Republic than it already was. It's like, well, everybody's going to want that deal now, right? So that's the rub.
Well, everyone's going to want the deal, but it took, like you said, some no-namer bank to get it. I mean, that means that they had to grind through it, really think about, okay, existentially, is this who we want to be? That's a lot. Whereas the big banks are like, I don't want to touch this thing. So it's going to be interesting. There are a lot of bank stocks, as people are figuring out. There are a lot of these mid-cap bank stocks in the Russell 2000, and that's why Russell 2000 got body bagged. So that'll be another short selling opportunity, because the Russell will bounce, the KRE will bounce, and the levels will really start to matter here, as they always do.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.